30 to 50 trillion, all on XRP, all trading on Artex.
Here we go.
Behind my original projections, but the total market is 1.4 quadrillion, everything that's ever out there. And if you start looking across any of those asset classes, they're all starting to move on-chain already. And the ease with which we've seen people interested in money market fund, tokenized treasuries, and those types of instruments, the support for stable coins, when you're talking about replacing cash, when I see DTCC, Euroclear, Clearstream, it only takes one of them to flip onto natively digital, and that's trillions of assets on its own that move. So, tens of trillions, I think we could see. And bearing in mind it's 1.4 quadrillion, this is still a tiny slice of a huge market. 30 to 50 trillion, all on XRP, all trading on Artex.
Here we go. $50 trillion. 2 years from now, Ripple, Twitter.
In 2025, legendary hedge fund founder Dan Morehead stunned markets by forecasting XRP could surge to an astonishing $10,000 per coin. If you've been following the crypto world this year, you know regulation has gone from buzzword to breaking news. In this video, we fill that gap, tracing the journey from draft bills in Davos to a bold $10,000 per coin forecast. Questions abound. What events triggered this transformation? How have real-world trials proven XRP's case? What forces will drive value to unprecedented heights? Stay tuned as we unpack every layer of this story.
It has proven itself. Something like 10, 11 years ago, imagine the programming of this, and you throw it out and that's the idea. It has not been hacked. It has operated, it is built, it has come an amazing way over that 11 years to be probably the most excited topic among a lot of people, and has been used and is now has obtained the status of having imputed value. At the same time, it is one of those assets that is an alternative money. I think we're entering an era where there's going to be a competition of monies, and Bitcoin is part of that competition.
2025 marks a watershed moment as governments race to define rules for digital assets. Amid storms of policy debates, one token stands uniquely positioned: XRP. While Bitcoin and Ethereum wrestle with uncertainties, XRP has quietly advanced toward the finish line of regulatory clarity. This clarity matters because it removes the biggest obstacle to mainstream adoption: legal gray areas. When regulators spell out the rules, institutional giants can enter without fear of enforcement actions. Imagine major banks routing billions on a blockchain cleared to the standards of the world's top financial watchdogs. That is the world XRP is preparing to lead. Yet few understand just how ahead of the curve Ripple Labs has been, laying the groundwork for an ecosystem designed to thrive under regulation. Our story begins in January 2025 at the World Economic Forum in Davos. 5 experts gathered to debate whether the cryptocurrency era was truly about to begin. Among them, voices predicted that a pro-crypto shift in U.S. policy would ignite global regulatory waves. Just days later, the United Kingdom dropped draft rules to bring exchanges, custodians, and token issuers into legal frameworks. Finance ministers from London and Washington pledged to collaborate on standards. At the same time, Europe's MiCA regulation was finalizing details on private wallets and stablecoin reserves. Meanwhile, Asian markets such as Singapore and Japan rolled out licensing regimes for digital asset businesses. Even the UAE positioned itself to attract blockchain innovators with clear guidelines. These parallel developments showed a synchronized march toward recognized crypto markets. At the heart of these frameworks, XRP emerged as a model asset built with compliance in mind. Today, we break down how each of these moves has brought us closer to the price target dashed across headlines, $10,000 per XRP, and why that goal may be closer than you think.
We just got some breaking Ripple and XRP news that is taking the entire market off guard. We just found out that Ripple is currently in the process of trying to purchase the company Circle, the creator of the USDC coin. Now, this would be a blockbuster home run deal if it could be pulled off by Ripple, and that's saying a lot considering they just landed 2 other monster deals in purchasing Medico and Hidden Road.
You've probably heard about crypto. The European Parliament has just approved new rules to regulate crypto assets, making the EU one of the first worldwide to regulate crypto, who are promoting responsible innovation while addressing the risks. Share the news, and maybe others in the world will follow.
Cast your mind back to late 2022, when the crypto world was convulsed by the collapse of FTX. At that moment, confidence in exchanges hit rock bottom as billions of dollars vanished overnight. Regulators around the globe seized the crisis to demand proof of reserve audits, transparent reporting, and strict capital requirements. Just weeks later, the Luna stablecoin debacle exposed vulnerabilities in algorithmic designs. Money poured out of DeFi protocols, and stablecoins lost their peg, triggering frantic calls for stablecoin regulations. These twin catastrophes became blueprint moments for policymakers, proving that self-regulation alone could not guarantee safety. Countries from Canada to Australia introduced emergency bills to tighten custody rules and enforce consumer protections. In the US, draft legislation aimed to codify exchange oversight and establish clear criteria for token classifications. As these laws took shape, tokens lacking clear use cases were flagged as securities. XRP, by contrast, was built with a settlement engine and bridge currency model that aligns with many regulatory expectations. Ripple Labs used lessons from FTX and Luna to refine escrow mechanisms and reinforce anti-money laundering protocols on the XRP ledger. By early 2025, the regulatory landscape had shifted dramatically across multiple continents. In March, the UK's Treasury published draft rules to regulate crypto exchanges, dealers, and agents under the Financial Conduct Authority. Finance Minister Rachel Reeves emphasized the need for transatlantic cooperation, underscoring the UK's intention to align closely with US regulators. Across Europe, MyCA set binding requirements for stablecoin issuers, token service providers, and custodial wallets. Member states prepared to enforce reserve audits and capital buffers for crypto firms, aiming to shield consumers from wild market swings. In Asia, Singapore's MAS introduced tiered licenses for digital asset service providers, while Japan's FSA tightened registration rules to weed out unfit operators. South Korea moved toward bank-issued stablecoins, and the UAE launched a comprehensive sandbox for fintech innovators. Taken together, these initiatives signaled a global consensus. Digital assets would no longer float in regulatory limbo. Instead, they would adhere to the same prudential standards as traditional finance entities. XRP, designed from day one for high-throughput settlement with built-in compliance hooks, found itself uniquely suited to lead this new era.
FTX went from $32 billion to zero just within 1 week. Sam Bankman-Fried lost $14 billion within a weekend. FTX raised $1.8 billion from investors and they walked out with nothing. FTX filed for Chapter 11 bankruptcy and users are in a fix whether they'll get their funds or not. Subscribe to Startup School to stay updated about startups.
This is not a great moment, and I think it's attracting a lot of negative attention, but understandably attracting a lot of negative attention. But at the same time, it can be a catalyst for us to sit down and do some of the regulatory work that's hard work. And that doesn't mean just bringing enforcement actions, though that may be part of what we have to do.
Absolutely. I'm so looking forward to being in Toronto in a few weeks. Yes, we have a fantastic panel. I'm going to be on stage with Anthony Suhu from MoneyGram, and Mackenzie from CNBC is going to be moderating the panel. The theme of the panel is, are stablecoins really the future of global payments? You have me on the stage with that question. It's a little bit of a leading question. I think that yes, stablecoins are the future of global payments. And hopefully we can bring that to life and have a really good conversation. Remittances is something that obviously both Anthony and I are very passionate about, but we want to take it beyond that and talk about mainstream payments, merchants, B2B payments, invoicing, all that good stuff.
Ripple Labs, the company behind XRP, has quietly executed a multi-year strategy to capitalize on this changing climate. Their annual Swell conference attracted leading banks, payment firms, and regulators, all eager to witness live demos of real-time cross-border settlement. At Swell 2023 in Singapore, attendees watched transactions clear in under 5 seconds, slashing costly intermediary fees. Major banking executives praised the network's efficiency, noting potential savings in operational costs and liquidity requirements. In April 2024, Ripple published a report showing how Europe's upcoming MyCA rules would supercharge tokenization of real-world assets, from commercial real estate to art collections. Pilot programs were already testing bond issuance on the XRP ledger with word of institutional participants lined up for token launches. Then came a watershed moment: Ripple's acquisition of Hidden Road in late 2024. The deal brought deep expertise in post-trade infrastructure, enabling institutional DeFi settlements at scale. Hidden Road's migration engine now routes trades onto the XRP ledger, bridging traditional custody systems with decentralized rails. This move blazed a trail for banks seeking to integrate digital asset operations under one roof. Understanding XRP's tokenomics is key to grasping why price predictions like $10,000 gain traction. At inception, 100 billion XRP tokens were created, with 55 billion placed in escrow contracts. Each month, 1 billion XRP is released from escrow, and any unused portion returns to secure new escrow batches. This predictable release schedule contrasts sharply with tokens that inflate supply unpredictably, giving institutional planners clear visibility on dilution risk. Since its launch, over 50 billion XRP have been distributed to partners, customers, and community grants. The remaining escrowed reserve ensures funding for network incentives, security, and ongoing development. This controlled supply dynamics underpin long-term value by preventing sudden token floods that could undermine market confidence. Combined with average transaction fees of a fraction of a penny and settlement finality under 4 seconds, XRP's network efficiency becomes a magnet for high-volume players. When institutional liquidity moves en masse, predictable supply curves and transparent release mechanisms provide the stability required for large-scale allocation.
President of Ripple speaking and open up swell. Take a listen to this.
In our industry, we think the headline of 2024, it has been the biggest year of institutional adoption for digital assets and blockchain that we've seen to date. And we think this has been driven by 3 trends. Momentum for global regulatory clarity, crypto getting validation from Wall Street as a bona fide asset class, tokenization of real-world assets. And we think this is just the tip of the iceberg. We know from working with financial institutions for many years that what they want is a one-stop shop that provides secure and compliant digital asset infrastructure. And that's what we do.
Today, Ripple announced its biggest move yet. The $1.25 billion acquisition of Hidden Road, one of the top prime brokers in the world. This isn't just another crypto buyout. Hidden Road clears over $3 trillion every year from major hedge funds and institutions. Now they'll use the XRP ledger to settle trades instantly and use Ripple's stablecoin, Relust, as collateral. This deal could finally merge traditional finance with crypto, and XRP is...
Real-world use cases further cement XRP's narrative. Remittance corridors, where migrants send money home, represent a multi-billion-dollar opportunity. Traditional remittance methods involve correspondent banking networks, often taking days and charging significant fees. On-demand liquidity, ODL, powered by XRP, revolutionizes this model. Funds are converted to XRP instantly, transmitted over the ledger, then converted into local currency at the destination, all within seconds. Early trials in corridors like the Philippines and Mexico demonstrated fee reductions of up to 60% and settlement times dropping from days to mere seconds. Money transfer operators reported improved customer satisfaction and lower capital buffers held in Nostro accounts. These real-time capabilities attracted attention from fintech platforms and legacy payment firms alike. Partnerships between Ripple and major processors hinted at integrations with Visa and PayPal rails, laying groundwork for consumer-facing remittance services leveraging XRP.
Wrath of Kahneman sharing this one with us. We have a new on-demand liquidity partner on the way, potentially. Ripple execs met with this exchange, Joya Lucas Exchange, in the UAE to discuss how Ripple enables money transfers, including ODL using XRP. The post concludes, we look forward to collaborating. So I did go take a look at this on LinkedIn. You can verify this one. This one's real. And the guys there, Mark Johnson, William Cooley, and Nick Taplin of Ripple, representing us so well. Love the blue suits. Love love it. Absolutely love to see it. And this is the general manager at this exchange in the UAE talking about this. We are excited to collaborate with you. Absolutely love to see it. Great work, gentlemen. Great work, Team Ripple. Getting it done over there. And we absolutely love.
As success stories multiply, these use cases showcase how XRP's utility translates into revenue opportunities for financial institutions and service providers. Institutional appetite for crypto is growing, but regulatory clarity is the lock that XRP holds the key to. BlackRock's filings for a spot Bitcoin ETF signaled Wall Street's hunger for regulated exposure. Although most ETF discussions focus on Bitcoin or Ethereum, hedge funds like Pantera Capital have quietly amassed XRP positions, anticipating a regulatory arbitrage window. In February 2025, the National Crypto Association partnered with Harris Poll to survey 2,500 U.S. adults, revealing that 1 in 5 own or use crypto, with adoption spanning genders, ages, and income brackets. Surprisingly, holders over 55 outnumbered those under 25, and nearly a third of owners were women. These demographics debunk stereotypes of crypto as a young, tech-savvy male domain. The survey also reported significant interest in tokenized assets. 48% of respondents expressed willingness to invest in fractional real-world assets on a blockchain. As these numbers rise, institutional custodians and prime brokers are racing to offer compliant crypto services, often highlighting XRP's regulatory robustness and settlement speed in their marketing decks.
Bitcoin has a very slow transaction speed, and XRP has one of the fastest. The current world transaction runs off of a thing called Swift. Swift is how you make transactions across the world, and XRP is looking to replace it. If XRP can even handle 1/10 of the transactions that Swift can, analytics project that XRP's coin will go up at least 15%. So that's my common sense. Take it or leave it.
Enter Dan Morehead, legendary founder of Pantera Capital, known for early Bitcoin bets and high-conviction forecasts. In a webinar this spring, Morehead laid out his thesis for XRP at $10,000, a convergence of network utility, restricted supply, and institutional flood. First, he emphasized transaction velocity. With trillions of dollars moving daily in global trade finance, even a small shift to XRP for settlement unlocks enormous value. Second, cost savings on fees multiply when processed volume hits institutional scale. Third, regulatory clarity removes legal overhang, unleashing trillions in institutional capital. Morehead projected that as tokenized assets like real estate and private equity migrate on-chain, XRP will serve as the settlement layer, capturing value through network usage. He estimated that if just 0.1% of global capital markets shifted to XRP rails, the network value would dwarf current market caps, pushing price to levels previously unimaginable. Macroeconomic conditions like persistent inflation, rising rates, and geopolitical tensions add incentive for diversification into digital assets. Taken together, Morehead argued, these factors justify a headline-grabbing price target. $10,000 XRP forecast from a top hedge fund manager isn't just sensationalism. It's a narrative woven from real-world events, regulatory milestones, and network economics. We've traced the journey from Davos debates to FTX and Luna crises that galvanized policy frameworks. We've seen Ripple Labs execute a multi-pronged strategy, acquisitions, escrow controls, on-demand liquidity trials, that positions XRP as the bridge between traditional finance and decentralized innovation. We've examined tokenomics, use cases, survey statistics, and macro factors that underpin Dan Morehead's bold target.
So when you're in an environment when it feels like risk assets are falling apart, I can see why that kind of bleeds through into crypto and Bitcoin again specifically. But what exactly is going to change in terms of investor behavior to make that different?
Yeah, so I'd say in these little short cycles, it does feel like it's a high beta version of the NASDAQ or whatever. But it's on a 20-year secular bull market. And that's what you have to keep in mind is that over the last 10 years, every 2 years, the number of people using Bitcoin or cryptocurrencies generally has gone up an order of magnitude. If that keeps going, we go from 200 million people using crypto today to say 1 billion in 2, 3, 4 years. the price probably goes up, right? And it really is Econ 101, supply and demand. So no matter what happens with the 10-year note or with the S&P 500, if 1 billion people are using crypto in 3 or 4 years, it will be a lot higher. And that's why I'm so bullish on it.
Now, the question moves from could it happen to when will it happen? Will the upcoming US elections or shifts in central bank policies slow the momentum? Or will they accelerate the rush toward digital rails? Will new protocol upgrades and cross-chain integrations expand XRP's utility even further? One thing is clear. As regulation crystallizes, the path to institutional adoption opens wide, and XRP stands at the crossroads. Do you believe this forecast will ignite a new era of finance, or do you see obstacles on the horizon? Drop your thoughts below, hit subscribe, and ring the bell to join us for the next chapter in this unfolding saga. Peace out.